Welcome to Wayne's World of Stats. Today we're going to take a look at what it took to get a mortgage back in 2012. With interest rates right here, 3.9% on average, it was pretty good for everybody refinancing or getting a new mortgage. Also interesting is 48 days to close. We used to be able to close a brand new mortgage in 30 days, and it took 48 on average to do a refi or to do an actual purchase, and those refis represented almost 2/3 of the activity. Pretty interesting. One of the reasons for that is because the feds, who have been procrastinating about new legislation regarding how to approve mortgages, still haven't passed any new legislation. They're hoping to do that sometime this year. So in the meantime, the financial institutions have been quite tough and very conservative about approving mortgages. Take a look at the average down payment, 21%. Who would have dreamed it was going to be on average over 20%? Debt to income ratios they've tightened up on. The house payment, 23% of your total income towards a house payment. That used to be as high as 30%. Also on total debt, we used to see that as high as 43% of your total income could go towards debt. And that's all debt. Types of loans. ARMs are way down to 3%, 15-year fixed running about 18%, and 30-year fixed loans, as expected, 80%. Much more conservative approach is that 30-year loan for most folks. But take a look at the credit score. An average credit score of 748. About 37% of the 200 million Americans only have a credit score that averages or exceeds 748. That means almost 2/3 of the Americans have credit scores less than what the banks approved on average for mortgages this past year. Although the housing market seems to have stabilized, the mortgage industry remains tight. We expect it to remain pretty tight through 2013. And until next time, if you have any questions, whether it's mortgages or real estate, feel free to give us a call. Talk to you soon.